Hello traders, happy Tuesday, start of the week. Apologies, I'm one day late with my free start of the week RRG video. Let's take a quick look at what happened last week in terms of rotation. And instead of picking one item, I just want to take a look at the bigger picture here using the basic RRG for US sectors. And on this RRG, we are using bubbles to indicate the beta of a sector. Usually low betas are considered to be defensive, high beta stocks or sectors are considered to be a little bit more offensive. And on this chart, the low beta are the open bubbles, the open dots, and the solid bubbles are high beta. So this is above 1 and this is below 1. And what you see is that last week, if we scroll through, let's say the last 5 to 10 trading days, that the move to defensive sectors, staples, utilities, to a degree energy and healthcare has stalled in terms of, staples and utilities is rolling over, energy is moving towards the lagging quadrant, healthcare is rolling over, insight improving. So this is clearly a rotation out of defensive into offensive. But this is a daily chart. And if you just look at the RS ratio, that's the metric of relative trends, you can see how utilities is by far the strongest, followed by staples, then energy, and so forth. So if I had to do a ranking, I would use JDK RS ratio, and that would bring utility, staples, energy on top of the list. And as you can see, these open bubbles indicate that this is the low beta, the low sort of defensive, more defensive area of the market. How does this relate to the longer term picture, which is what we can see when we bring up the weekly RRG, and that's this one. And here you can see maybe the opposite, because what you see here is that energy, utilities, staples are actually still pushing to the right, moving higher on the RS ratio scale, indicating a move to defensive sectors. Same's happening with healthcare. This is inside lagging, but it's picking up a little bit of strength inside lagging. But maybe even more important is that sectors like consumer discretionary, technology, real estate are all moving to the left and pushing further into the lagging quadrant. So that's money moving out of offense. I totally realize that this is a bit of a conflicting situation where the daily and the weeklies are not completely in sync. So because of the longer term outlook, the longer term picture, maybe a little bit more weight of the evidence if you wish, I usually add a little bit more weight to the weekly trends because they are the longer term trends. And as you can see here, or at least the way I read it, is that this is still a move to defensive sectors going on with a little hiccup last week and maybe even this week. We don't know how it's going yet, but the bigger picture is to defensives moving out of more offensive stuff. And that is something that I want to keep in the back of my mind, especially when I look at the market as a whole, at the, let's say, the S&P 500 index. And I'm not going to do a full-fledged analysis of the S&P 500. I'm not going to sit on Todd's chair doing wave counts. He's way better qualified than me to do that. If I take a look at the S&P 500, what I see is that we had a corrective move out of this long rally. And we pierced that. This is a 10-week moving average. Dropped below it. Now we're back above it. But that old high, so there's like 3 weeks where we touched the area 5260 and around 5260, maybe 5265. That is now, I think, a very heavy resistance area. And we are near to that level. So the upside potential for the time being is capped to that previous high, where the downside risk is quite considerably. I mean, it's definitely towards this prior low here, which is 49.50. But if I look at some simple technical indicators, so here's the MACD, it's rolled over. It's a negative signal, simple trend following indicator. It's rolling over, sending some sort of a negative signal. If I look at the RSI, then we're clearly coming out of a very overbought situation, like 84. That's a level that we haven't seen, wow, going back to early 2020, like right here. That's the first time since then that we reached that level in the RSI, and we came crashing down quite rapidly towards 50, and now we're bouncing upward. But you can see, or at least I hope you can see, and maybe you agree with me, that even if this move up pierces through that 52.60 area, there is a very high chance that the RSI will be putting in what's called a negative divergence, where the price is not confirmed by what's happening in the RSI. And so here's a good example of that. So you make a high, you drop, and then you kind of pierce above that level. Looks as if you're breaking, but then when you break back, the RSI puts in a lower high where the price puts in a higher high. That's a negative divergence. It's usually a predecessor or a signal, or at least a warning signal for some sideways move, even some downside move to be happening. So all in all, with sectors still moving or defensive sectors dominating, price very close to a very heavy resistance area, potential negative divergence in the RSI, MACD rolling over, I'm still pretty cautious about what's going to happen with the market as a whole. From my point of view, we would need to see a very clear break of this overhead resistance with divergence in the RSI vanishing and a sector rotation which is more geared towards offensive sectors, or at least out of the defensive sectors. At this time, I don't see that, and that continues to make me pretty cautious and careful approaching this market from an extremely bullish point of view. I mean, we're still in an uptrend, that's very clear. But the question is, do we need more of a corrective move before we go higher, or do we pierce immediately higher? Right now, I'm still in the camp where at least we need a pause, just to digest all this upside stuff, potential divergence, and the rotation towards defensive sectors. Anyway, that's it for this week, start of the week. I'll be working with Todd to do a more in-depth view on Wednesday, Thursday with the SIS report and all the other stuff that we're delivering to you here at tradinganalysis.com. I hope you enjoyed the show, and I'll see you again next week. Same time, same place.
Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.